ARM Holdings stock has climbed approximately 15% in recent trading, reaching around $223. This movement brings the stock closer to its 52-week peak of $239.50, with a market capitalization now exceeding $235 billion. The surge follows a notable endorsement from CNBC's Jim Cramer, who described ARM as a horse on X and affirmed his belief in its undervaluation. Cramer's public position through his charitable trust has historically influenced market sentiment, and this time was no different. The stock's momentum is further supported by ARM's recent financial performance. For fiscal 2026, the company reported revenue of $4.92 billion, a 23% year-over-year increase, and non-GAAP earnings per share of 60 cents in Q4, surpassing analyst expectations. These results have helped validate investor optimism. In March 2026, CEO Rene Haas announced the launch of ARM's first chip, the AGI CPU, with revenue projections reaching $15 billion annually by 2031. The announcement alone triggered a 16% single-day stock surge. Analysts remain cautiously optimistic, with Sanford C. Bernstein initiating coverage at Outperform and setting a $300 price target. However, the company faces potential headwinds from ongoing antitrust scrutiny, which could affect long-term growth. Jim Cramer's endorsement is notable not only for its timing, but most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Also for its source. Cramer has been vocal about ARM's potential, especially in the context of emerging markets like humanoid robotics. His January 2026 recommendation to accumulate shares was backed by a clear investment thesis, suggesting that ARM's financials could become gigantic with the right catalysts. The stock's recent performance, which has nearly doubled year-to-date in 2026, reflects a broader market confidence in ARM's ability to deliver on its promises. The financials back up this confidence. Revenue growth of 23% year-over-year is a strong indicator of ARM's expanding influence in the semiconductor industry. The Q4 earnings of 60 cents per share, which exceeded expectations, suggest that the company is not only growing, but doing so efficiently. The introduction of the AGI CPU is a significant milestone for ARM. As the company's first chip, it represents a shift from a pure-play IP licensing model to a more direct product-based strategy. The chip is expected to play a key role in artificial general intelligence, AGI applications, a market that is still in its early stages but has the potential for massive growth. Projections of $15 billion in annual revenue by 2031 are ambitious but not unreasonable given the scale of the AI and computing markets. The market's reaction to the AGI CPU announcement was immediate and strong, with a 16% single-day surge in stock price. This response suggests that investors see the chip as a meaningful catalyst for future growth. While the financials and product launches are strong signals, the broader market environment remains a factor to watch. ARM stock is currently trading near $223, still below its 52-week high, but the trajectory is upward. Analysts like those at Sanford C. Bernstein have set a $300 target, which implies significant room for further appreciation. However, the company's exposure to antitrust. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Scrutiny could introduce volatility. As regulators around the world become more active in tech and semiconductor markets, ARM's expansion plans may face legal or regulatory hurdles. The next key signal to watch will be the company's Q1 earnings report and any updates on the AGI CPU's adoption. If the chip gains traction in the market, it could drive another surge in stock price. Conversely, if regulatory challenges intensify or customer adoption is slower than expected, the stock could face a correction. Investors should also monitor Cramer's future commentary and any additional analyst reports, as these could influence short-term sentiment.